Welcome to a capital hungry breakdown of EURJPY. So it's been a minute since we've done analysis on this pair, but previously we took advantage of market optimism as well as strong euro stimulus and potential changes in market structure to take advantage of some EURJPY buys. But we're going to start from the higher time frames, go to the intraday time frames, map out the key levels, and see any potential trade ideas we can take, while also breaking down the fundamentals that are impacting both the euro and impacting the Japanese yen. So I just have some key points here to obviously note is that we have a risk currency versus a safe haven. And post-market crash that was caused by coronavirus, of course, we have seen a lot of liquidity go into the Eurozone, as well as recent headlines of heavy inflow still into Euro equities, which has been shared in the trade room and, of course, the newsroom. This means that Euro equities have still been holding strong. Euro economic data has also been rebounding from PMI figures from Germany to France to Italy. And we've had strong Euro stimulus and support from the ECB, as well as that market optimism sentiment supporting the boost in risk currencies overall. As per the Japanese yen, we of course know that the Japanese yen is a safe haven, so market optimism is of course keeping liquidity out of the Japanese yen. And of course the Japanese index itself, when we're looking at it on the daily and zooming out, is still fairly bearish. It is respecting some intraday bullish market structure, but it is still not breaking previous high points or breaking the overall bearish market structure. So I do see potential for some continued upside, especially as when we're looking at the yearly. We've also grabbed liquidity from these previous yearly low points where we have failed to break previously in history. And we're seeing the candle bodies we're seeing current price come above these candle body conjunctions and have some potential room to the upside to correct more of this downside move if we don't have any changes in overall market sentiment or any changes fundamentally as per global lockdowns from coronavirus. If we don't have anything that is going to negatively impact the economy, most likely this optimistic train will continue to run and we have that room for upside. So I'm just going to start mapping out some key levels and areas of interest using these candle body conjunction points, as well as some of these previous higher time frame wicks, and then start moving down the time frames to see if anything is contradicting our overall analysis, or if we can still continue to run the upside for risk currencies against safe haven currencies. Yes, I don't have to go all the way down. We'll just use candle body points. I gotta edit this. Cool. I'll change that after. Now you can better see some bullish market structure, of course, developing from the quarterly perspective, right? We also have this overall bearish market structure, which we still have potential to retest, very similar to when I was just doing the GBP USD breakdown. We have had multiple attempts to break previous historical lows that have failed, and we are also creating a lot of potential support here with all these buy orders, generated from this low point post crash, as well as breaking some of this intraday bearish market structure, shifting into bullish market structure and having that upside move to potentially correct this downside move and come test these candle bodies area of interest, as well as this overall bearish market structure. So I do see potential for more upside when I'm also looking at the quarterly chart, like the 3-month chart. So very similar to Euro USD, where we had a break of this bearish market structure, failure to break previous intraday, not intraday lows, previous historical lows, and shift into intraday bullish market structure. And we're seeing some very strong bullish engulfing candles as well. The only thing is this monthly has already grabbed some liquidity to the upside and created a top wick. And I do see some potential for this upside move getting some type of correction and a deeper pullback and lower wick before we have the upside move. But we're just going to start zooming into the time frames. I also want to see how price has worked through these key levels, and I'm just refining the zones using some monthly candle body conjunctions. But let's watch how the last month has played through these levels. Some of these ranges are tight, but they're tight for a reason, but they're still 70 pips. The larger ones we can better refine as well. Okay, so some very nice key levels to use as guides. Just from an intraday perspective, when we're looking at the 4 hour, you can see we have broken the previous high. So I would not mind getting a retest of that high. I'm also seeing some strong bullish market structure developing. Or even if we got a pullback to 123, and I'm just going to round off some of these levels for myself. Or even if we got a pullback to test that market structure, we are still overall very bullish on all time frames, and would still be around the same point of the previous high. Sorry, got to refined here. Well, yeah, let me round these off. Sorry, forgot what number it was there. So overall, as we have peaked a high and broken above the previous high point, to me, it would be ideal to get a pullback to around 123.5 and test this overall bullish market structure, and then continue that extension once we have a pullback and more order flow in the market. And as long as we continue with that market optimistic route and overall market optimism, I would only really see safe sells. Just seeing this medium term zone in there as well. I would only really see safe sells with, of course, the fundamental confirms of European equities falling off their highs, seeing the safe haven currencies inflate. When we look at the Japanese yen index, we look at the US dollar index, and we see gold continue to rally like the beast it is. We start to see market fear around coronavirus actually lead to lockdowns. We see any uncertainty through these different political trade talks that are going on, whether it be between the euro or US, the euro and UK, the euro and potentially China as well, which is still supposed to be talked about. And then I would only see sells below 123 flat, where we're breaking bullish market structure, failing to break previous highs and have those market fear confirms. And this, of course, very similar to the GBP USD breakdown, just because we have a safe haven, just because we have a risk currency versus a safe haven currency would be the market fear route, okay? So a lot of the market structure across these risk currency versus safe haven pairs is looking fairly similar, give and take like the minor details that can impact the pair specifically, or sorry, impact the currency specifically. Like, of course, we can have anything related to the China trade deal, Brexit, anything related to domestic conflict in these individual countries that can arise. So just be cautious of that, okay? But overall, we can confirm that smart money is running collectively through the market as it's just following this either optimistic or fear sentiment, and coronavirus and lockdowns, whether the containment of it and economic recovery side or the potential for another lockdown is really what has been in focus. And we always know that smart money would prefer market optimism, which keeps equities, corporations, and all these whales and top 1% continuing to get rich and continuing to make money. But if we have the confirms of fundamental fear, we will obviously see them adjust as well, and we can start to take advantage of that when we see that shift. So I'm just going to set up all the key price level alerts. You can also reflect the previous EURJPY breakdown. I'm going to label this chart. Very similar concept like when we're looking at Euro USD, when we're looking at GBP USD, and we're looking at other similar pairs that are following risk sentiment and following overall market sentiment. So let's continue to monitor headlines and economic data, as well as price action in the market structure for some key probable setups that we can take advantage of as per our long-term plans.